Wall Street Pete, sick dough in crypto. Want to learn how to make sick dough in crypto? Yes. Excuse me. Yes, I'm choking. Yes, we are live for you, talking about the next top three that I will accumulate, perhaps in this next 3 months, coming down for the last 2022. So if you're interested in that sort of thing, hit the like, hit the subscribe. This is our second video, Selner, so you're behind one. Good morning to you, brother. Hope you are enjoying your time off or whatever you may be doing with yourself. Please, you deserve relaxation time. Wall Street Pete coming in now. Here we go. Without further ado, total crypto market cap, $935 billion. Let's get a quick refresh because we had that last time. 934 to get the, I guess, refresh, but let's see what's going on in the total crypto market cap. So 19,500, we are above that price for Bitcoin. Currently want to go over three assets that I will be stacking my bags, and I'll have a reason behind it. I'll have technical analysis behind it, right? For the number one, let's do it. Mana Decentraland. Mana Decentraland was pretty impressive on its last bull run. We'll be looking to stack my bags as they have been doing nothing but adding a little more fuel to the fire. So we got to pay attention to the development. Obviously, do your own research every single day. Hit the like and subscribe. You're not going to get things handed to you unless you watch the Wall Street Pete show, perhaps. So Mana Decentraland, currently right now on the charts for TradingView, and please, we got to destroy the algorithm. Hit that like and subscribe. Coming all the way from 7 cents before it really broke off. And this is what I wanted to show people. I wanted to understand where we're going, where we're coming from. January 2021, right? Many of you might have gotten into this, decided to start doing crypto channels in the 2020 era. I said, let's go, it's time. I can't watch this craziness no more. And then it popped off. I started doing videos. Here we go, technical analysis every day. All right, so getting into this right now, as you can currently see, we are getting this fall, and the fall here was almost 78% Mana Decentraland. From its first peak in April of 2021, it went up to $1.65. The total crypto market cap went crazy. The people, everybody, it was rallying. Everyone was excited, right? Right shoulder. If you were to ask me what this is, I mean left shoulder. Most likely, as you know, not most likely, 100%, this is the head, right? We teach you these things. These are charts, technical analysis, and patterns. What scares the living bejesus out of me is this is the right, and I don't have water. It's annoying me. Excuse me. All right, so left shoulder, head, and obviously right shoulder. If this is what's currently happening on the daily for TradingView, we have time and down for a fall all the way to perhaps 37 cents, 36 cents if we are continuing to fall. If the whole market is doing so, if we are done, we could be getting this V-shaped recovery right now, and that's why I'll be dollar cost averaging into this, because if I take out my indicator, relative strength index on the daily, it's doing something similar to what all these next two assets I'm going to show doing, all three of them. Pretty bullish on the bottom here. Looking pretty good. I do like that on the RSI. Obviously, we don't go with one indicator and think it's over, but from the fall, 88.5% compared to the 77.6, we are already over the top and already under the amount by a good, what, 11%? So we're over the maximum fall here. I do get nervous that the old resistance, now this is how it works. Let me get rid of the 7 cents so you can see what's going on, and we're going to get to the next thing here. But if you pay attention to where I'm going here with this, where's the line? Did I lose my line that fast? I deleted the line. Okay. There it is. Deleted the line. I apologize. That orange line. This is old resistance flipping into support that could happen. So if you pay attention, that's where I'm getting the 37 cents from. And that's why I'm a little concerned, because there's a couple things that factor. The head, inverse head and shoulders. What would have to happen? I would probably get a huge fall with the rest of the market. Bitcoin would then be fighting at 13,000, 11,000. This is some of the scenarios. This is technical analysis. I prepare you for these things. This is why you hit the like. This is why you hit the subscribe button, because we prepare you. This may never happen. I am not a fortune teller. I'm not going to be able to tell you so, but I do see that there's a bullish divergence down here on the RSI level for the daily. If I look at the weekly, well, we already know we haven't been this low on the weekly since October of 2019. Can we see that from a good 3 years ago? Talking about a 4-year cycle. Perhaps we come down and retest that all the way down to the 31.3 on the weekly. But I'm trying to explain to you there's not much more coming. So in the next 3 months, this might be something you want to pay attention to. Man of the Central Land has been impressive. It was all the way down at 14 cents. So for the next asset on my top 3, we're going to talk about Ethereum Classic. And I do have a reason why I like Ethereum Classic. As you can see here, Ethereum Classic has not received the momentum, the volatility that you might want to see. But 40%, 41% down roughly is its worst case scenario. So when I take it down, and I don't like to go all the way to a liquidity grab, it's not really a fair reading. I do see Ethereum Classic coming down to 89.5%. We're almost down 90%. Can we give it a break at this point, right? We have gotten our balls kicked in. A lot of people don't understand what has happened to Ethereum. Well, now with the proof of stake, you're having a hard time. You could no longer obviously mine with a rig on the Ethereum chain. You're having a hard time, right? So what are we doing? We're going to the Ethereum Classic now, and we're going to get the miners and massive move towards the hash rate on that. So it's going to take time, and as you can see, what is happening? Well, since we hit the top, or down here, however you want to say it, well, if you pay attention, what do we look to see? Well, long, boring sideways action is what we look to see. And ladies and gentlemen, if we have not received that in a long span already, I don't know what we're waiting for. So pay attention to the last boring sideways action, ladies and gentlemen, as I'm trying to explain to you before a humongous rally. People are going to give up. It could get a little worse, as we said. And pay attention to the levels, as you can see, all the way to here. And as you see the top here, $65 is a nice sell-off. I'm sorry, not 65. As you can see here, $54 is a nice sell-off from this line here. So that happened all the way in March of 2022 this year. People were fortunate to get out if they did, able to accumulate more, and we're going to see what happens. We're looking to get high volatile waves back in the long term and then a pop to the upside. That's what I'm mainly looking for. So the next coin, the next asset, as many of you may already know if you could guess it, Cardano. Cardano doing something a little similar on the daily, same kind of thing, but the RSI does catch my attention as well. Seems like all 3 assets are down here in the dumps. I don't know if you understand that, but not every asset is doing that. Here's Ethereum, right? It's not doing that. It's not showing that. Bitcoin, most likely, not showing that. Bitcoin and Ethereum are doing the same thing. They're on a trend to the upside currently right now. How long will it last? We'll take it probably up to the 20,500. That's what I'm expecting to see. But Cardano, like I said, if you pay attention, definitely to mention, we are down here at a pretty low bullish area where I like to buy on the RSI level. So one indicator showing me, another one showing me what might happen. And why do I love Cardano? Because the ecosystem is so excellent. The ecosystem is pretty well. I do see this here, alt resistance coming into the 2020. And what would happen is the 15 cents would occur. I said 20. Starting to look like 20 cents and 15 could occur if we get this Bitcoin fall. I don't believe we're going to get it, but this is just preparing you. The final asset, Cardano ADA. And what do I expect for Cardano to perhaps do here? Well, if I can get this, and if we're lucky enough, we're going to see a 41-cent spike off that RSI. So I do believe, as you can see here, we do have a falling wedge textbook on the daily. It's looking rather nice, and it's not precisely to where we want to be. But if, like I said, we are going to pump through, we're going to see volatility in this kind of magnitude. So it's kind of important, but I do like the buys. Maybe you want to sell at 41.5 cents. That's completely up to you. None of this is financial advice. Just a gentleman twice is nice, but this is something what I'm looking to see have occur here. So now, like I said, the RSI level's pretty low. Whipped out the MACD. I'm sure it's been very bearish for a little bit here. RSI levels are in a beautiful state. Not like it can't go down a little more, but it's in a good spot where I would dollar cost average, and these are your 3 assets for the next 3 months. So be excited to see what's happening here, and I do see a nice few little ticks here on the MACD. Very, very bearish coming, looking to flip here bullish now, like I said. So look for a short-term tick up here. Perhaps we get to the 40 cents, 40.5 cents, and I would definitely raise that a little lower. Even though that's where I expect to bounce, you want to beat the whales. So not financial advice, like I said, but these are some of the things we do to prepare you. So look for a 40.5 cents rally, nothing spectacular, and then we'll see what happens from there, because all these charts here are really looking bearish, and I'm not really excited for this because Yeah, it's buying opportunities, but I really just want to get to the breakout. I'm pretty sure every person here in the crypto space agrees with me. Yeah, do we want to buy cheaper? Yeah, we do. A lot of us are in liquid, yes. But you have to dollar cost average in at some point in time. Otherwise, you're going to miss the boat. So I would say be careful. The more and more we test the bottom, the scarier it gets. But right now, currently, we are testing this upward falling wedge, this downward slope, nothing upward about it, as I say. But if you see here what's happening, we're looking to test each time before we break out. Well, that's kind of what Bitcoin has done. So if you see that, and if you notice that, and this is the daily here for Bitcoin, giving you an understanding what I was thinking was going to happen, just giving a little correlation to it. If you see here, we got to get the double bottom M rejection there. We have to get it. And right now, currently, getting a little upward momentum. So we'll see if we can continue to get that. Most likely a rejection, but if we can break above or get past this 20,500, we will ultimately breaking out and be seeing processes of elimination here would take us to the 30,000 price. So if you're excited, Wall Street beats sick dough in crypto. Every day we go over these types of things. I wanted to make it a short, nice video. My top 3 I will be accumulating in the next 3 months. Please start very, very small in the beginning, right? If you have 10,000, you're looking to invest, 20,000 to invest. We're going to start off with like 10% into our entry of dollar cost averaging. We're not going to put half in. We're not going to put a majority of it in, right? We're going to put our toes in the water. It's called dollar cost averaging in, and nobody has ever gotten burnt from dollar cost averaging in unless you're just holding all day and getting smacked around. You dollar cost average in and you dollar cost average out. So slowly take your benefits. It is kind of benefits, but slowly take your profits, which is a benefit for you. So not a financial advisor, like I said. Gentlemen used to work on the New York Mercantile Exchange, and I really do care. I want many of you to prevail. I want you to understand that the crypto space is here to stay. Keep buying shit coins, and you're going to get hurt one day drastically. So if you're not taking profits immediately off those shit coins, you better start doing it. I know Sumner, he's got a little method going, a little strategy. And what does he do? Well, he stakes it. He takes a little bit, and whatever he put in, plus his profits, he gets out. And if it shits the bed the other half or amount he has, guess what? He goes, oh, well, I made my money. And you have to do it that way. And guess what? 5 years, 4 years down the road, if he forgets about it and it explodes like most cryptos will do, you're going to do very well. The problem today is that most assets are going to flunk and shit the bed. Why? Because we're going into a crazy time right now. Some are going to prevail, some are going to do great, but we do not need 20,000 cryptocurrencies, and that's the problem in this crypto space right now. So my personal opinion, my experience, this is what I'm facing. This is what I'm feeling. Let me know in the comment section. What do you feel? How do you think what's going on in this recession? Is it going to get worse? Do you think Bitcoin is against a hedge against the inflation? Do you think the Feds are going to keep rising us past this 5% rate hike in 2023? Let me know your thoughts. Wall Street Pete, I'm out. Till the next video. Hope you enjoyed it. Hit the like. Hit that subscribe. I'm trying to kill the algorithm. We cannot get above the algorithm because we're not getting enough likes. Thanks. I hope we get more. Take care.